Hello, and welcome to Virtual Investor Conferences. We're very pleased you joined us for our quarterly Small Cap Growth Conference. The next live presentation is from Information Services Corporation. And Information Services Corporation is a leading provider of registry and information management services for public data and records. Please note, for attendees, you may submit questions and view a presenter's availability for meetings by clicking Questions and Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Jonathan Hacksaw. He's the Senior Director of Investor Relations and Capital Markets of Information Services Corporation, which trades on the TSX under the symbol ISC. Welcome, Jonathan.
Thank you very much, John. Very pleased to be here. This is our first attendance at this conference, so very much looking forward to sharing a bit about ISC and introducing the story to those of you listening in today. Before we get too far into it, as you would expect, I'm just going to draw your attention to the forward-looking information that you would see it in the front of most of these presentations. I'm not going to take you through that. I'll leave you to peruse that at your leisure as you go through the presentation when you're reviewing this. So as this is the first time we're presenting to this audience, I want to take the time to really kind of just drill down into a bit of high level about who we are as a company. And then I'll get into the various lines of business that we have, talk a bit about our financial performance, both historically and as we see it coming in the next year. And then we'll talk about our ambitions for growth, and then we'll take it into the Q&A. So let's start with an overview of the company. So as John mentioned very nicely in his introduction, we're a leading provider of registry information management technology and services for public data and records related to personal property and corporations. Predominantly in Canada at this point in time, registries are essential for legal transactions, property rights, and corporate governance. We manage and provide access to registries, ensuring security, legal compliance, and ease of access for users. We operate through three lines of business: registry operations, services, and technology solutions. Our current sort of general cadre of customers includes government agencies, private businesses, and corporations, legal professionals, financial institutions, and individuals. And I should say that through one of our heritage companies, we've been around for over 100 years, so very, very experienced in registries. Today, we've got about 550 employees, 8 offices in Canada, one in international office based in Dublin. Our guidance for this year, and I'll just make one point that all of our numbers we report in Canadian dollars, so please bear that in mind when I'm talking about or referring to numbers. Q3 revenue was about 60.9. Our adjusted EBITDA was 22.7. We pay a quarterly dividend, and the board declared one last quarter at 23 cents Canadian per quarter, 92 cents Canadian per annum. Year to date, based on our current reporting, we paid a little over 12 million in dividends paid to date. We've got about 12 million cash on hand. We've got total debt of about 178 million from a $250 million facility, and I'll get into a bit more about what's driven that debt on our balance sheet from that perspective. So that's just a general overview. From your perspective as potential investors, what you need to really sort of think about is the company's been delivering very strong growth, predictable cash flow, and revenue diversification across our three segments. Our registry operations segment, this really is sort of the jewel in the crown. It's the foundation upon which the company's been grown. We have a contract with the government of Saskatchewan at the provincial level here in Canada to run the Saskatchewan registries, the land, personal property, and corporate registries here in Saskatchewan through to 2053. And we expect to generate around 1.3 billion Canadian dollars in cash flow over that time. So very, very excellent contract, and needless to say, something that's going to really lay the foundation for driving the growth of this business. Services segment, We've grown that business from $12 million to over $100 million in revenue since one of our first acquisitions after going public in 2013. We bought a company called ISC in 2015. So we've grown that business, as I said, from 12 to over $100 million in revenue per annum. And then third segment we have is our technology solutions segment. Really not as big as the other two, very nascent to a large degree, but lots of future growth and international expansion there. We've got a strong history of M&A. We've deployed over $200 million invested into 8 transactions since 2015, all done through a mixture of cash and debt. We have not actually issued any equity since we went public in 2013. Always looking to reward shareholders. We paid out over $150 million in dividends since our IPO in 2013. Got a strong balance sheet and free cash flow to support our organic and M&A growth strategy, which I'll talk about in more depth. But essentially, in March 2024, we announced our target to double our annual revenue and adjusted EBITDA by 2028 based on our 2023 actuals, and hence the guidance. We expect revenue to come in at 240 to 250 million and adjusted EBITDA of 83 to 91, and I'll get into that in a bit more depth. All of this is underpinned by great assets, but also a world-class management team and board of directors with, as you would expect, lots of experience in a combination of registries, information services, technology, finance, and M&A. So those are the team pushing that forward. So let's get into the operations. As I said, we've got 3 segments: registry operations, services, and technology solutions. Our registry operations segment, that's the one, delivery of registry information and regulatory services on behalf of governments and private sector organization. Each registry serves a specific purpose and caters to different stakeholders. Our core registries that we've always been sort of predominantly focused on are land, corporate, and personal property. These operate a little differently to what you'd be used to in the States. Land registry, we do that at the provincial level here in Canada, and whereas in the US, you do things at a slightly lower level, down to the township level in some cases, I believe. Corporate registry is fairly similar to your UCC, Uniform Commercial Code registries in the States, and I'll talk about this a bit more. We actually have a couple contracts at the state level deploying some of our technology there. And then the personal property registry, this tracks security interests of movable personal property. We also have some other registries that are both typical and non-typical registries for both government and corporate clients, and I'll talk about that a bit more in a bit. Each of the registries we operate serve a critical function. These functions are crucial for real estate transactions, property ownership, verification, legal dispute resolutions. Lenders and borrowers can use them to secure and verify claims on personal property, and so on. But our role in managing these registries ensures and is to ensure accurate and up-to-date records that are accessible to authorized parties in a secure and efficient manner. Our growth is supported by free cash flow. I mentioned we have a contract with the Saskatchewan government until 2053. When we IPO'd in 2013, we had a master service agreement with the government of Saskatchewan that ran to 2033. In the middle of 2023, we announced an extension of this agreement until 2053. Total purchase price of that was 300 million Canadian dollars, 150 million up front, followed by 5 $30 million payments per annum, of which we've already made one in July of 2024. But that should, for those of you who saw the debt number, we've paid for that with debt using our facility there. So that hopefully explains the 178 million that's drawn down on our 250 million dollar credit facility. But this really was essentially a generational contract. As I said, we expect to generate 1.3 billion Canadian in predictable cash flow until 2053. It's extending a long-standing and successful partnership until then. Provides us with strong, stable, long-term cash flow. New revenue, we had some fee adjustments there that came through with that contract. Transaction economics were very attractive. And as I mentioned earlier on, it acts as a catalyst. It helps lay the foundation to accelerate our long-term growth. growth strategy. So just getting into the services business, this business really came about, as I said, around 2015 when we acquired the brand under which this operates, ISC. And this leverages our core competencies in understanding registries and how to extract and package that critical data. So what we do here is we deliver solutions uniting public records data, customer authentication, corporate services, collateral management, asset recovery, and accounts receivable management. And that helps our customers in the financial and legal sector to support the registration, due diligence, and lending practices of customers across Canada. Some examples of this: we operate through 3 divisions. Regulatory Solutions, which is the largest, that's where our due diligence and collateral management solutions exist. Second is Recovery Solutions, that's where we do asset recovery and accounts receivable management. And then finally, the original core part of the business, Corporate Solutions, Incorporation Services, and Corporate Supplies. In our Technology Solutions segment, what we do here is we utilize our proprietary technology to deliver and enhance operations and services for government and private registries globally. These are leading technologies that deliver operational excellence, market differentiation, and customer satisfaction. As I said, very much the nascent part of the business and the most impacted by the pandemic, but since sort of 2022, we've seen things start to ramp up there again, and we'll talk a bit more about that as we get into it. So just in terms of the strategy and the revenue composition for these 3 segments. So when you think about this, registry operations, this is about consistent growth, sort of Saskatchewan GDP on an annual basis with a strong, predictable foundation that's underpinned by long-term contracts and meets the growing need for data management integrity. Services is really sort of the organic growth engine. This is the strong growth business that leverages that core competency, as I mentioned. And then finally, Technology Solutions establishes, really good scaling opportunities and layers technology and long-term innovation into our portfolio, which we really like. So just an example of some of our clients in registry operations, I've mentioned Saskatchewan. We also have the Government of Ontario. In 2022, I think it was around June, we acquired a company that provides the tax services in the background for over 440 municipalities in Ontario. So that's part of our registry operations segment. And then last year we announced that we'd won a contract to run the Bank Act Security Registry at the federal level on behalf of the Bank of Canada. So those are sort of really exciting opportunities there. In the services segment, we're not we can't comment on who exactly our clients are due to contractual prohibition, but we mainly serve the legal and financial industry. What I can tell you is that we currently service 18 out of the 33 Schedule 1 banks here in Canada, as well as 12 out of the 15 of the largest law firms. On the Technology Solutions side, number of clients here: Irish Aviation Authority, Nova Scotia Provincial Registry of Joint Stock Companies, which is their corporate registry. That's a 10-year contract. States of Guernsey, and most recently we announced a contract with the Principality of Liechtenstein to build and deploy our Regis technology to their, I'm not going to try and pronounce the German version of corporate registry, but it's for their corporate registry. So just looking at our industry, and I think this will also helps layer in our thinking around our growth objectives and our plan for 2028. So we see certain market trends, and we've been seeing this for a number of years. So the first, in terms of why businesses come to us, we see an opportunity for the outsourcing of business processes and services. Governments, law firms, financial institutions, they're looking to focus on their core competencies, and that isn't always about certain things in terms of doing due diligence and things like that. They like to outsource that, and they're looking for savings to do that. So that's where we see an opportunity. I think one of the real big opportunities here as well is the increased regulatory and compliance requirements that we've seen across the board, and our solutions help navigate that. Needless to say, an emphasis on reliability and security of information. We've got the know-how, processes, and technology and experience to do that. And then we just see a really great opportunity in an emerging global registry market across the 3 segments in which we operate. And we continue to believe that that's an emerging sector. So just in terms of the competitive landscape, who do we compete against? So on the registry operations side, these are really, generally speaking, long-term concessions that we're up against. So we tend to find ourselves coming up against infrastructure firms, private equity firms when these opportunities do arise, although that's more akin to elephant hunting. Terranet, you'll see that name across the three segments. They're probably the most like-for-like competitor that we have. They're also Canadian. On the services side, you'll see a few here. Trader recently entered the Canadian space. Dye & Durham, some of you may be familiar with. We compete with them for a small part of the legal sector. And then on the technology solutions side, you see some familiar names there. What sort of binds these three segments together and what differentiates us from others is we typically have long-term contracts, whether they're 3 to 5 year contracts, which for a lot of people is long-term, or contracts that we have running to 2053. Strong customer stickiness through exceptional customer service. That's a real common thread running across our business. We do believe that that's a real differentiator for us, along with the quality of our technology. And that sort of creates that competitive moat and the advantages that we feel set us apart. So just diving into the financials quickly, just to give you a sort of understanding here. So talked about guidance early. 2024, we guided for 240 to 250 million in annual revenue, Canadian dollars that is, and adjusted EBIT of 83 to 91 million. We recently announced our 2025 guidance and noted that we expect to be at the top end of our 2024 guidance. We haven't reported our full year yet. We typically do that around March, following the end of the year. Our financial year is December 31st. And we provided our outlook and guidance for 2025. So we're expecting to do between 257 and 267 million in revenue in 2025 and around 89 to 97 million in adjusted EBITDA. So just looking, just giving you a sense of where the company's come from since going public in 2013. We've got a 10-year graph here. So registry operations provides for steady and predictable cash flow. We've grown services, technology solutions, and you can see that across this chart here. Just to talk a bit about 15, 16, 17, 18, and 19, where you saw registry operations, which was at the time just the Saskatchewan registries tapered off a bit. Saskatchewan went through, starting in 2015, went through a bit of an economic downturn, and this really just is a reflection of that. But you can still see as the business starts to pick up again and the economy picked up again, particularly into the pandemic, it really kind of moved there. And then you can see the growth that we've generated from a revenue perspective in the services side, and just TS being sort of a small generator there. On the adjusted EBITDA side, getting down to that bottom line, you can just see across the board how that's grown over the years, just moving in a stable fashion, driven by revenue growth and just operational execution. And then free cash flow. I mean, this is a big feature of our company and one of the fundamentals, and that obviously supports growth and dividends. But you can just see the upward trend there over the last 10, since 2015. Just looking at the quarter financials, as I said, we've only reported up to Q3 at this point, but you can just sort of see where we were there. And by comparison, market cap of just under $500 million, cash on hand of about 12. We've got a shelf prospectus in place, $250 million credit facility, and $177.5 million currently drawn as debt. All that debt is really been used for the upfront payment of the extension that we did in 2023. We've very, deliberately, as we announced, that said we'd be looking to delever by paying down that, and that's been what we've been doing over the last year and a bit, to the extent that in September 2023, our debt was about 178, and as at the end of September 24, it was around the same level. So we've been working to bring that down. We've got a goal to get back down to 2 to 2.5 times debt to EBITDA ratio. So let's talk growth. This very much is underpinned through, when we looked back as we were looking at the extension and we were moving that forward, we were looking back at the previous 10 years and realized that we doubled the size of the company on a revenue and adjusted EBITDA basis over the last 10 years. So as our CEO was looking at this, his view was that it was time for a new growth goal and to publicly put a marker down. And, we looked at it and we felt that we were in a position to look at doubling the size of the company on a similar metrics basis based on those 23 results, but we're looking to do it in half the time. And that's through a combination of organic growth and M&A, predominantly driven by organic growth and supplemented by M&A. But really on that side, we're committed to an accretive M&A growth strategy, and we'll pursue opportunities that expand our reach and capabilities. On the organic growth side, really coming from our services and technology solutions segment, but the bulk coming from services and capital allocation in terms of deploying that. We've got a great history of disciplined capital allocation with a strong focus on deleveraging, as I mentioned, maintaining and growing the dividend and investing in growth. Talked about our strong track record of acquisitions. This just sort of highlights the companies we bought over the years. And then just in terms of our acquisition strategy, nothing I think that would surprise anybody here. We've got a preference for anything over $50 million for us. That is deemed to be larger. Looking for EBITDA positive, accretive, in line with EBITDA margins. We typically purchase price of typically, multiple 7 to 9 times EBITDA is kind of our sweet spot there. And just a bit about leadership before we move into the Q&A. But, our leadership comes from a fairly varied and valued experience. Some of these names may be familiar with you. Viterra, which I believe is in the middle of being acquired, Mosaic, E&Y, Bayer Crop Science, IBM, many folks from the government of Saskatchewan, HSBC as well. So very varied experience from that perspective. Just a bit about the team. Sean, our president and CEO, he's been with the company since April of 2012. He joined as CFO, and in 2022, when his predecessors stepped down to essentially retire, Sean stepped up into the CEO role. Bob Antichow, our CFO, was Sean's Senior Director of Finance, so he stepped into the CFO role there. A number of folks have been with us for a long time. 2 most recent additions, Ryan Graham joined us as our VP of Corporate Services. He's an accountant by profession, but been in the banking sector and run technology. And then Todd Antle joined us recently, nearly coming up to a year for Todd, as VP of Registry Operations to fill in for his predecessor who'd retired subsequently. Kathy Hillman-Weir has been with us, been with the company since its inception in 2000, and brings really a degree of expertise in registries that is really second to none. Our board of directors, so one point to note, the government of Saskatchewan retains a 30% shareholding in the company, regardless of their shareholding, even if they were to sell it all tomorrow. They are guaranteed the right to appoint a minimum of 2 directors. Currently, they've appointed 3 pro rata their shareholding. Joel Teal, Amber Beemans, and Doug Emsley are those appointees. All other directors are elected. But what I will say, they're all business professionals and very much committed to executing on the mandate of when the government took the company public in 2013 to grow it. So just to sum up, ISC is really about delivering value and significant growth. We're a leader in the space in which we operate in registry and information management. We've got highly predictable revenue model with stable cash flow generation. Again, I'll talk about what we expect to do between now and 2053 in terms of 1.3 billion Canadian in cash flow. Proven track record of delivering organic and M&A growth. So really that's what's underpinning a lot of what we expect to do by 2028. We've been disciplined in our capital allocation, and we've got a great strong balance sheet. So with that, I think we got about 6 minutes left. I might have gone over a little bit. We've got a few questions coming up here, which I'm going to deal with there. So We've got a question. The first one is, what are your milestones for 2025? As I mentioned, our guidance, we just put that out a couple weeks ago. So we're basically looking to build on what we expect for 2024. And I'll just bring that slide up. No, so we're looking to do between 257 and 267 in revenue for 2025 and between 89 and 97 in EBITDA. So hopefully that helps. So dividend, what is your dividend policy and do you have an active buyback? Excellent question. So the board of directors from the very beginning has been committed to paying a dividend with an intent to growing the dividend over time. So when we came out the gate in the IPO in 2013, we had a dividend of 80 cents per annum paid quarterly. In 2021, September 2021, as I recall, the board announced an increase to the dividend of 80 cents per annum to 92 cents per annum. Their view was that they look at capital allocation strategy on an annual basis, but as they looked at it that year, they felt that the company had executed on a number of acquisitions, had grown, and it was time, and we were in a position to increase the dividend. We're not an annual dividend increase, so that's not part of the commitment, and we don't have an active buyback policy. Sure. So the next question is, can you speak to M&A activity in your industries? Is your growth plans dependent on M&A or organic? Excellent question. So on the plan to double the size of the company between now and 2028 is based on both organic growth and M&A growth, but it's predominantly through organic growth, really driven by a services segment. We've been investing in that business with a view to putting it in a good position to execute on that organic growth and supplemented by M&A. In terms of the activity in our industry from a pure M&A perspective, there's been some consolidation in the Canadian space through companies like Trader coming in, Terranet, ourselves, Dye & Durham did some consolidation as well. But really, still, we feel there's some opportunities as well. So hopefully that helps answer that one. Next question is speaking to our geographic footprint for our current services and opportunity to grow the footprint, which is a really excellent question. So predominantly based in Canada in terms of physical presence with an office in Ireland. I'll maybe just take it by segment. But on the registry operations and technology solutions side, that's really a global business in terms of the opportunity there, predominantly in the Commonwealth and Europe for us. So those are the opportunities there. And on the other side, is there opportunity to grow the footprint? Absolutely. On the services side, we're predominantly focused in Canada. Needless to say, we'd look at opportunities elsewhere, including the US, depending on the opportunity, wherever it is. But really, very much an international business in a lot of ways, and hopefully you can see that through some of our contracts and customers. So I'm just coming up. I'm going to take a couple more questions here because I think we've got a couple minutes left. So on the what is the ownership of ISC? Insiders, institutional, strategic? Excellent question. So insider ownership, I'll deal with that first, is fairly small. It's less than 1%. As a not your typical come to IPO, the company prior to IPO was what's called a crown corporation. So for ease of reference, it was a government entity. So none of the management or staff had an opportunity to own a part of the business. So rather unique in that sense, but executive are compensated through long-term comp. So there is that building up, but it's not traditional in that sense. On the institutional side, so the government of Saskatchewan owns just under 30%. Institutions own between 30 and 35%. Lots of long-term holders there. And then the balance is retail, but it's really made up of, I would say, family offices, high net worth individuals predominantly. And strategic, I suppose, not so much in your traditional strategic aspect, but very much sort of institutional and retail based in that sense, fairly even. So with that, I think we're coming to time here. So really do appreciate the interest today, and those of you who've put some really excellent questions in front of us, and hopefully that's been helpful to everybody and answer them. But what I would say is if you do have any more questions, or you'd like to drill down more into the company after you've done some due diligence, or just in the using that, please book a meeting with me. Happy to chat more about the company all day. I think really great company, really solid business, and I think worth anybody taking a look at it. Very unique, particularly with our long-term contract. So with that, thanks very much for your attention today, and thanks very much for joining us.